Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. Turbulence continued this week as some mediocre economic reports gave investors an excuse to sell. In particular, the Friday jobs report was cited as a key piece of information needed in order to give the market a consistent direction. The doom started Monday when the Institute for Supply Management said its index of factory activity fell to 51.3 last month, the lowest level since May of 2013. The number was well below analysts' expectations of 56. Even though numbers above 50 indicate expansion in the economy, the miss was too great to ignore and stocks went into a tailspin. On Tuesday, the Commerce Department said new orders for manufactured goods dropped 1.5%, but it was considered a neutral report since new orders actually gained 0.2% if transportation equipment was excluded. On Wednesday, the ADP employment report showed a rise of private payrolls of 175,000 in January, slightly above expectations. And the Institute for Supply Management non-manufacturing index for services increased to 54 last month, up from 53. On Thursday, unemployment claims for the week ending February 1st fell 20,000 to 331,000, prompting a nice relief rally. The big news was Friday's jobs report. 1 month ago, December's number came in at a dismal plus 74,000 jobs, and Wall Street rationalized it as a fluke. Today, January's number came in at only plus 113,000 jobs, also a big disappointment, but the markets took the news well, in part because the blame was placed on bad weather, and the unemployment rate fell to 6.6%. Now let's take a look at some stocks. Twitter released their first post-IPO fourth quarter earnings Wednesday evening and disappointed investors. The company actually reported great financials with earnings per share coming in at 2 cents, while revenue was at $242.7 million. Both were above analyst projections. However, the company also said that monthly active users were up a meager 9 million quarter over quarter, and that the US user base increased by only 1 million. Twitter stock fell as much as 22% during Thursday's trading. The Walt Disney Company announced their earnings for their fiscal first quarter 2014 and was able to beat the street's forecasts. The company's diluted earnings per share increased 34% year over year to $1.03 from 77 cents, beating the estimate of 92 cents per share. Shares of Disney experienced gains upward of 5% during Thursday's trading. Pandora Media announced their fourth quarter and 2013 calendar year financials, and shares of Pandora tumbled as much as 13% when the market opened on Thursday. The company's 2014 guidance for per-share earnings is lower than analysts' expectations. Green Mountain Coffee Roasters received massive attention in the market Thursday, gaining over 30% in value and reaching a new 52-week high after the company announced a 10-year partnership with the Coca-Cola Company, under which both companies will collaborate on the development of Green Mountain's new at-home beverage system. Coca-Cola will acquire a 10% ownership of Green Mountain for about $1.25 billion. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.